The property market has reached all-time highs in multiple areas around Australia. Today, we look at whether this means prices will start to fall, or are they likely to keep rising and become even more expensive than they are right now? And here's what I can promise you. The answer to this question will disappoint many. Let's dive in. Hello, it's Nero here, founder of the Investment Rise Buyers Agency, and if you're new to my channel, hit that subscribe button because I talk about all things related to the Australian property market and the economy. Now, if we look at the latest data from CoreLogic, we can see that there are multiple property markets at their peak. Sydney, Brisbane, Adelaide, Perth, and multiple regional markets. And even though certain markets are falling, the median property price in Australia has risen for 19 months in a row. So the question then is, what happens next? Now, if you speak to someone who has any experience with shares or with cryptocurrencies, they will probably tell you that this means that the property market will fall, because that's essentially what seems to happen in the share market or the crypto market. When prices reach all-time highs, there's generally some sort of pullback. But is that likely to happen with the property market? Well, the first thing to understand is that property is different to these other investment assets because it's not a liquid investment vehicle. You can't just buy a property today and then sell it tomorrow like you can with, say, shares. Secondly, people live in property. Property is not just an investment vehicle, we actually live in it. So therefore, just because prices have risen doesn't mean that people are now going to sell all of a sudden, which would then bring property prices down. And thirdly, and this is the big one, property prices are subject to supply and demand dynamics. So therefore, property prices seem to rise when demand is higher than supply, and they fall when demand is lower than supply. Right now, and I've spoken about this in the past, we have a property shortage approaching 300,000 properties on a nationwide basis. So what does that mean? Well, let's take the Gold Coast housing market as an example. Now, certain areas in the Gold Coast have risen 20 to 30% in the last 12 to 18 months. Many people are asking, if a market has risen that much, can it keep rising or will it fall? My answer to that question is, it is irrelevant what has happened in the past. What will determine what's likely to happen in the future is the demand versus supply metrics. Here we have data put together by Matusik, which tracks new dwelling supply versus the demand status for the Gold Coast City Council. Now, if the Gold Coast was a balanced market, there would be roughly one new home built for every 2.1 new adults. But instead, as you can see here, new dwelling approvals is falling. Currently, only one new dwelling is being approved for roughly every 4 adults. And dwelling registration is even worse. We're only registering one new dwelling to be built for roughly every 7 adults. So there's a huge undersupply of new dwellings in the Gold Coast City Council. And when you have that level of undersupply and the population is still growing, then the odds are property prices will rise. Why? To answer that question, let's have a look at this whiteboard situation. Let's just say that we have 100 people who want to buy properties in the Gold Coast City Council or any particular city council that you're looking at. And let's say that we only have, in terms of properties for sale, let's say 80 properties. So then what does this mean? It means that the 80 people who can afford the highest prices, they are the ones who will get the properties. 20 people will miss out. It's just supply and demand. Now, as in this example, the Gold Coast City Council population is continuing to grow and they're not building enough properties. What we're going to see is maybe instead of 100 people looking for 80 properties, we may have, for example, let's just say 120 people now looking for properties, and we only have 85 properties for sale. Okay, so sure, there's been a slight increase in supply, but demand has increased even more. That's what these stats are showing us when we look at dwelling registrations and dwelling approvals falling. What it shows is that the gap between demand and supply is likely to get bigger. And what does that mean? Well, that means that property prices are likely to keep rising and quite steeply in multiple locations. That's why when someone says this area has already risen so much, can it keep rising? The answer is it absolutely can. We're not buying something in the share market. We're not buying something in the crypto market. I know very little about those markets. But when it comes to property, the only thing that matters is demand versus supply. And in the markets that are more affordable, where people are moving into those areas, it's likely that property prices will rise even more than, say, some of the more expensive markets where, sure, people are moving into those areas and yes, they're not building enough properties, but because prices are already so high, the demand isn't increasing by as much because people can't afford those higher property prices. So when I see headlines like this talking about how Brisbane's property price hot streak might end, or the fact that Sydney's market has peaked and price growth may slow, these sort of headlines really make no sense. They're simply basing it on people's fears. They're saying prices have risen so much, so therefore they're unlikely to keep rising going forwards. None of that makes any sense, as hopefully you're starting to see. It all comes down to finding the areas where demand is higher than supply, and those areas property prices are more than likely set to rise and rise quite significantly. Now, we have another factor here that's really going to change things. We know right now that inflation is falling. Most lenders are expecting the RBA to drop rates somewhere between December to February. Now, what will that do? Well, we can't build a whole string of new homes overnight, but more people will be able to afford property than they can right now, because as interest rates fall, people's borrowing capacities increase, and you're going to have more people jumping into the property market, which is likely then to force property prices even higher than they are right now. So don't be put off by the fact that multiple property prices have reached a peak. Many of these markets hit a peak 12 months ago, and since then they've already risen 10, 15, 20% in some cases. And look, go back through history and ask yourself this question. When Sydney property prices hit a median price of $1 million, that was a new record at the time. Today, $1 million for a 4-bedroom house in Sydney is cheap. Look at Brisbane. It's now hit $1 million for property prices. I expect that with the demand and supply metrics, in a few years' time, people will look back and say $1 million in Brisbane is cheap. So we have history on our side, which shows that just because a property market hits a peak, that's no indication that property prices will fall. It all comes down to the same thing that I've said multiple times throughout this episode: demand versus supply. Find those areas where demand is higher than supply, property prices are likely to rise. But as you saw from the data I shared earlier on, property prices are not rising everywhere. Some areas prices are falling. So you do have to do your due diligence. You can't just say, oh, the median price in Australia has risen for 19 months in a row. Prices are rising everywhere. I can buy anything and make money. You can't, right? You do need to do some due diligence. You do need to make sure you're doing your research correctly. And if you want help with that, check out the link below to get totally for free the audio version and digital version of my book. Otherwise, I'll see you next time.